All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Before we get into the S&P 500 here, I just want to show you a little news snippet. So a few weeks ago, we talked about uh, Fed Presidents Kaplan and Rosengren basically on their quest to become day traders while working for the Fed. And now another shoe has dropped in the story here. So Richard Clarida uh, was now trading right before the Fed emergency meeting last year. Looks like he was long a bunch of index funds right before they did their emergency meeting. You can see all these, mutual funds and index funds here. So just a little tidbit there I thought would be funny for to start off with here, as we talked about it a few weeks ago. And this government, remember, this government now wants you to report any income in excess of $600, but they're, have no problem being day traders essentially while making policy decision. So just a little tidbit for you guys there. But anyways, let's get into the markets here. So S&P 500 having a tough week this week, but it did bounce finally on Friday. It really could not get out of its own way all week long. Monday started off relatively flat, and then Tuesday, Wednesday, Thursday just could not catch a bid. If we look on the intraday here, even on Wednesday where it was flattish, it tried to rally, and then into just sell off into the final hour there. And then of course, Thursday was a real beat down. Did finish a little bit off the lows, but more selling on Friday morning before getting a nice rally. Now, I see two scenarios here. So firstly, I still think this market really needs to have a blow off top at some point. But the question is, is this a short-term bottom or a more longer-term bottom here with Friday's price action? And do we just go, rocketing to new all-time highs here first? Or, possibly the other scenario would be we test lower prices. And that is the one I think that is going to happen. So let me explain this. I believe that if you take the 454 high here, and you just multiply that by 0.1, so 10%, that would bring you right to about the 410, 412 area, and that would coincide with this pivot here. It also perfectly coincides with the daily 200 moving average. And as you guys are aware, I'm sure, it's been a very long time since we revisited that 200 moving average. So a test of that would not be out of the question. In fact, it would be very normal for that to happen. And secondly, we still have a lot of bears in this market. The bull bear ratio is even lower than it was the previous week. It's now at 46 or 46 and a half, I believe. And markets rarely top out when there's that many bears in the market. So just bear that in mind. But I do think in the near term, we are going to make another at least leg lower here before putting in a more medium to longer term bottom. Let me explain. So we talked last week about the lower low here we took out this pivot, and again going back all the way to March, there's no lower lows. It's all higher low, higher low, higher low. Let's zoom in. Higher lows, higher low, low, higher low, low, higher low, low, higher low, and every one of these big green reversals on the pullback is a higher low. This one we made on Friday, we took out Thursday's lows and we took out the low from last week. So even though we didn't close below, we didn't make a new closing low, we still made a nominal new low. So now you have a lower high, a lower low, and now another lower low in place. So now the next logical step here would be to look for a lower high. If we get that, then we're looking for another leg down, most likely. So areas of resistance here. And by the way, that fib level that I put up last week, it held perfectly. So if you guys remember, I showed you this 618 here. I believe this is the high. But that 618 area held pretty much perfectly all last week and the week before. So that was a nice level there. But where I would expect the market to run into resistance is around this 440 area. Maybe it gets as high as the gap fill around 442. And then you would probably look for some resistance. Maybe you have the 20 moving average down sloping. So the market bounces up into this 440 area and it coincides with that 20 MA, that could be resistance, and that could be an area where this market maybe struggles and starts to roll over. So that's kind of what we're looking at in the near term. Also, NASDAQ really underperforming. You don't want to see the NASDAQ underperform in a bull market. So the NASDAQ is really struggling to catch a bid. Notice how, it's made lower lows here, and it was red Wednesday, and it made another, it's long since taken out last week's low, whereas we look at the spider, it really just took out last week's low, and the spiders are definitely outperforming a little bit more so. The semiconductors are underperforming a little bit over the last couple of weeks here, so that's always a major indicator. And we look at, Dow transports. Transports are looking weak right now. I think this is going to have to go down and test 13,000. I think that would be your major bottom. And now it did hold up. It did manage to hold the low from last week. It had a nice bounce off the lows, but this has been soft for quite a while now. And that is something to be, taking note of. And one thing I will say, though, is that the IWM, if this market does get a bid, I think the Russell can break out to new highs. And, the Russell's been stuck in a range for a long time, as we know, but it is held up. And look, it's making higher lows, actually. So you have a low in July and then higher lows really over the last couple of months. And I think if this market does roll over, the downside in the Russell is probably a little bit more limited. But with that said, if it does take out this low from July, it's going right back to this 195, 196 area. So just bear that in mind. But the Russell could be on breakout if it holds up while, before the market fully bottoms out, which I think will be here around the 200 moving average. So just keep that on the radar. That's what we would be looking to play on the long side if that were to happen. So let's move on to volatility here. I get a lot of questions about volatility. So with the VIX, you guys know I've been talking about leverage short vol for a while now. And interestingly enough here, the VIX does have the tendency to make these sort of higher lows before a major volatility event. So you can notice here we put in a bottom in August, and then we had these higher lows here, sort of an upsloping market, which was also upsloping with the S&P. So there's a divergence going on. And in 2019, you have the higher lows here, while the market was climbing, basically most of that time. And the same thing here in 2020, a higher low here as the market was climbing. Now, this year, we've put in a low in late June, and we're making these higher lows as the market was climbing the whole time. And so now the market is just coming in a little bit, but this is something to note. It's something to keep an eye on. Doesn't mean the VIX can't trade a little bit lower. As we look, you can see here in 2017, we put in a low, and then another slight lower low before making that one spike there. That was the Volmageddon spike. So it's not to say that we can't trade a little bit lower in the VIX first, but this is something to keep on radar here. And leverage short vol is a powder keg, and when it blows, it's going to blow very hard. So that's why you guys know I've been pretty open about that, that I've been accumulating volatility strategically for a while just because of the upside potential to that. So this is something we're going to be watching very closely in the near future. So let's move on a little bit, talk about energy. So crude is really held up well here. I don't know if it can get through that double top resistance, but it is, it is starting to consolidate here, which is what you want to see. So this is bullish consolidation. Now, if this fails and rolls over, it's probably going to have a sharp decline. But as of right now, it's holding up a lot better than I thought it would. Again, I still think that this monthly double top is resistance, and you can see how long it took. It took about 5-6 months for this to break down. So symmetrically, you'd expect about 4, 5, 6 months before it can break out. So I don't quite think it's ready yet. You also have all this red here. You have these pivots, these low pivots here that would be resistance even if it does break out. So if it does push through that, I still think it's going to be tough for crude to really push very much higher from here. I just think it has a lot more backing and filling to do. But that said, I also thought that it was going to have more backing and filling to do here, and it's proved me wrong since then. So, you know, we're giving crude the upside bias for now. We also have, we talked about last week, XLE really confirming the move, having a nice rally here. This is a little inverse head and shoulders. It should get up to 55.50, 55.55. That's where I expect it to run into resistance. That would be your target on this inverse head and shoulders. Also showing strength are the XOPs and the OIH, although OIH is a little bit softer, but still has a nice pattern here. Also a little inverse head and shoulders there as well. That should get up to about the 230 handle before stalling out. And then, of course, nat gas really just been a powerhouse, but it is starting to chop around. So nat gas may be stalling out here. So when you have a lot of volatility after a meteoric move like that, a lot of the times that can signal that it's starting to run out of gas, no pun intended. So we had this big tail here, and then a sell-off, and then a rebound, and then a sell-off. So we're starting to see that volatility increase, and that was after we had that pullback too. A lot of the times you make your one initial pullback, and then you have another like exhaustion high before the correction comes in. But as you know, and again, we talked about this tail here, which you did take out, but you closed below this week. We talked about that resistance here, and then of course this double top here, and nat gas pulling back in a little bit. So nat gas, it was very extended, but it's continuing to hold up, and until we see it again, we make a lower low. That's how you know it's topped out. But until that has happened, it can still hold up and move higher. So let's talk a little bit about the dollar index. So, you guys know I've been bullish dollar since really March, and this was just a crowded trade. Everybody expected it to lose 89, and the dollar is going to go, it's going to go into free fall, and it's going to go down to 70. They're not going to let it do that. First of all, it was a crowded trade, so it was going to get a technical bounce anyway. But you have to understand, yes, lower dollar is good for equity markets, but they want a controlled decline. They don't want it going in free fall. That would freak the markets out. They can't let the market just lose the 89 handle and have the dollar go into free fall. It would almost be as bad as if the dollar was, spiking up to new highs. So there's kind of a yin and a yang to it. Also, the dollar trading range gives Washington an excuse to print as much money as they want. So you have to keep these things in mind. But the point is, technically, again, you just simplify the charts here. Low, higher, low. You did make an equal low here, but ultimately ended up being a higher low. Then you broke up to this trend line, struggled to get through it, but you put these higher lows in, and now you're breaking out. And I said that, dollar was going to run into resistance around 94.50, 94.65. That was the target ultimately. I still think it can go higher, but obviously pulling back off that level. And the dollar bulls really just the dollar bears really just got their heads ripped off over the last couple of months here. But regardless, dollar making a nice move here and is coming into a little bit of resistance, which is helping gold, helping the precious metals get off the lows now. You do potentially have a series of higher lows here on gold, but again, this has not been a super inspiring chart lately. And if the dollar continues higher, it's not going to be good for gold. But again, like we talked about, what's the worst that can happen? It pulls back to 1550. That's going to be like an epic lifetime buying opportunity. So, we're not looking at this from a short-term perspective at all. And nobody really should be when it comes to gold, because it's not that type of an investment. It doesn't mean you can't trade it, but for your long-term positions, you shouldn't be concerned if it makes one more leg lower. And then looking at silver here. So silver's held up a little bit better, had a nice bounce the last 2 days, and you really took out this red bar. So that is a good sign. It could be a sign of a fake breakdown. So we'll have to see a little bit more with silver. The precious metal that I really like, that you guys know, is platinum. This has a much better pattern here. You have the nice surge here. I said that was likely a bottom. You got a little bit of a pullback to this this previous breakdown area, and you're getting a bounce off of that. And as you can see, just by price, it's outperformed gold, silver, and platinum, or palladium. Palladium's been probably the softest one as of late, but it is very oversold short term. But I do like platinum right now. in the near to medium term. And then moving on to yields. So again, we finally got a little pullback in yields on Friday. I do expect that to continue a little bit, but if we get a good pattern here, this could be a good entry for a long. You guys know I've been talking about this for a while. I do expect yields to break up to 2%, possibly even 2.2. And on the 30-year, we'd probably be looking at 2.6, 2.8 as a possible high there. Maybe even 3% on a really an exhaustion blow off. But I do think yields are going to be the trade here in the next couple of months, and we're just really looking for pattern to get into that. And then lastly, we'll just cover Bitcoin really quick. So we talked about that, the manipulation, the shadiness going on last week, and you can see as soon as the contract expired, Bitcoin was really kind of allowed to rise. So it had a nice day yesterday and Thursday. So popping up, getting above this red bar high, and now it is still into a little bit of resistance here. You're going to have some resistance here at 50,000 and maybe a little bit above that. And then your big level would be this upsloping trend line. But if you can get through that, it probably gets up to that 65,000 area very quickly and maybe even breaks out to new highs. But you guys know I've been talking about it. And I've been a bit of a bear medium term on Bitcoin. But if it can get back above these levels, then that bet is off. So just wanted to give you guys a little bit of coverage there. But anyway, sorry for keeping it a little bit longer than planned this week, but there was a lot going on, a lot of volatility in the market. So I just wanted to make you guys appraised of all of that. But anyways, guys, take care. I will talk to you next week, and you guys have a great rest of your weekend.